Good NFP day, guys, gals. How's everyone doing? How is everyone? Yash, Patrick, William, Tamaz, Tom. Everyone ready for the NFP? I say no effing problem for the NFP. How about you guys? So, earlier in the week on Turnaround Tuesday, recommended shorts in Canada here, covered it Wednesday, said there's still a chance for 126, almost achieved. I'm not going to play roulette, but give me one more rally over 26 between there and 6.5, and I'd probe for top in USD CAD, just my view. I think that you could look, you'll see a lot of three drives, even in the dollar was the first to get there yesterday. Pretty classic looking three, right? 1, 2, 3. Maybe the dollar could generate one more push to 94.30, 94.40 up here. I would try it. And actually, the weakest dollar pair still seems to be the yen. You would have thought that with the dollar recovery here, that we could have already taken out this high, this two driver, and had a 3 over 1370. So I'll also be looking at the yen because it's really not responded. So when I look at markets and I see a market that normally should respond to a strong dollar, and we've had a nice dollar rally, I ask myself, especially the last week or so, if it can't rally with a tailwind. Everyone with me? If it can't rally when it should be with a tailwind, what's going to happen if the dollar catches a bid? Okay, so that's the way I look at markets. If it can't do what it's supposed to do when conditions are favorable for it to do it, what's going to happen when conditions change, when and if they do? And this dollar rally ends up being, I'm not saying dollar crash, but pullback. Blake showed that, we could have a right shoulder developing in the days ahead. And I could be all wet and the dollar just explodes and blows through all kinds of, blows out all the divergences, but you're definitely getting some. In Euro, you have some, right? It's not the best on the 1 hour. That's why I think there could be one more shot down. Areas are about 1680 to 1630, where I'd be looking for the long side of the dollar. So I guess you get the drift. If we have a strong number, which is going to be pretty distorted because of the hurricane, I'm not going to be able to read it. That's why I'm so glad I have Blake and Steve and Stelios. These guys can dig through the reports like you guys notice every day when you're on ForexAnalytix. You're not just getting the technical picture, you're getting the fundamental picture. So if you haven't subscribed to the service, invest in your future trading performance. Click the link and risk $1 for a 10-day trial. And then sign up for 6 months so you could join us in our trading room, which has really picked up in activity. I've seen 80 in there, 80 good traders all day long after the end of this session, or whenever you're up. If you can't sleep, you'll even find some people up for Europe and Asia in case you're lonely. So I'm lonely speaking right now, Blake.
How's it going, Dale?
Will you keep me company here, buddy? What are you thinking? What are you thinking here?
Well, first of all, I had to. I cleaned out all my dollar shorts. I had a couple dollar shorts. I had like $1 yen and $1 Swiss, and I've been short them for a couple of days. And I had to close them ahead of NFP, so I had to take some losses, which is fine. It's just minimizing risk, and let me pull up, first of all, pull up the dollar. Okay, and
you're gonna show the box.
Yeah.
Did it try and pop out of that little rectangle yesterday?
Well, we're still there. Here, let me pull over everything. Okay, can you see my screen? Yeah. I pulled the box out because it was too difficult for me to look at, like
Okay.
yesterday, to continue to look at. But it's basically right here. I mean, we're right at the top of it, and I just didn't want to take on the risk. I was short for the last couple of days as we were in the box, and as we were starting to drift up, I'm like, you know what? There's no sense in taking on risk here. Although, frankly, this is, from a risk reward perspective, this is the place that you short it here, you put your stops above the highs. The problem is you got non-farm payroll, so
yeah, stops are meaningless.
Stops are meaningless. You can gap right through them. So you don't, that to me is, you get in. If I've been in a situation, and the broker that I use is an institutional broker, and which is even worse than a retail broker. Because if you think about this, guys, when you're trading retail, you're allocating anywhere from, some of you guys and gals are trading 10,000 worth of currency to maybe 100,000 worth of currency, maybe a little bit more. But that's the average retail trader. The retail traders, you're chopping away at it, 10,000, 20,000, 50,000, 100,000 euros or dollars, worth of currency. And the brokers can sustain, they can, that's why they can guarantee stops in a lot of these brokers, although that's what they say. I don't necessarily, agree with that's how they execute, but they can execute those trades. But when you're dealing on an institutional level and you've got, $2 million, $3 million, $5 million worth of a currency, somebody's got to take the other side of that trade. So that's why when prices gap, they gap. I mean, like for example, if I'm long the euro dollar, which I'm not trading the euro dollar right now. I don't have any dollar positions on. If I'm trading the euro long, and let's say the number is extremely bullish, the dollar, we beat the headline number, wage inflation is high, the euro could gap down to, by the time I get executed, could be at 116.20, and then you throw a $2 million worth of currency on. I'm just using that as an example. I can lose 15 grand really fast. So I'm, for me, it's like, I'm not willing to take on that risk. And so that's why I have to close out positions as we approach these big NFPs. And I think it's a wise decision for a lot of you guys and gals, especially if you're, getting close to your stops. It's like, okay, well, the volatility is probably going to stop you out anyway. Now let's talk a little bit about the NFP just in general. I've heard a lot of chatter about everybody's expecting a weak number. Okay, everybody, and this is not just in our community. This is in the guys on my trade desk, guys that I follow on Twitter, research reports that I read. Everybody's expecting a weak number. That means that anything that is better than weak is going to be good. Mm-hmm. So if non-farm payrolls come in at let's say the market's expecting 82,000. Well, let's say we come in at 82,000. That's not that bad. But what the number that everybody's really looking for is the average hourly earnings. Now, average hourly earnings is supposed to come out at 0.3%. That is 0.2% better than expected. Excuse me. So if that number comes in line, that is going to be where the dollar gets the bid. So if you have a weak print, so let's say we only create 50,000 jobs, you really should look at the wage hourly earnings, because if the hourly earnings have increased, that means inflation is increasing. The Fed's got to continue to raise rates, because remember, not only is this a number that people are expecting to be a relatively weak number because of the hurricanes and the storms in Florida and in Texas and everywhere else, is that we are also near full employment. So our jobs we're not going to be creating 200,000-300,000 jobs anymore. We're going to be creating 150,000 jobs at best. Being in this situation. So, and the Fed's very well aware of that. So we have to just pay more attention to, as long as inflation continues to rise, that is going to be where the dollar shines. So now, you know, there's, and let me explain something else too. Do you see this technically? Do you see this fib here? Okay, this is the dollar index. Okay, I'm moving it so I can recenter it. All right, there's a 38% retracement. Okay, right here. I should get rid of this 24% retracement. Where did that 24% retracement come from?
23.
Oh wait, is it? That's it. Where's this 38% retracement come from? Let me get rid of that.
Yeah.
Okay.
We're at 23.
Yeah. So we're at the 24% retracement. I'm sorry. I was like, is it the 38%? That's not the 38% because I noted it this morning that we're at the 24%. This in itself, if broken, would allow for a dollar recovery. In my opinion, we could go up to 38%, something like that, at least, if not even higher. You know, there is. Now, everybody seems to have forgotten this risk, but there is a risk. One thing that I'm also paying very close attention to, and I think everybody should also pay close attention to, is that, remember, we're not out of the woods with North Korea by any stretch of the means. I think the biggest risk is if the dollar starts to rally, and this is my biggest fear, it being long the dollar. If the dollar starts to rally, and let's say we go through the weekend and then Saturday things start to pick up again with North Korea, like escalate, not words, but let's say things start to get a little bit more real. You know, yes.
Good morning. Sorry to interrupt. Do you think that the comments Trump made yesterday about the calm before the storm,
Oh my God. I couldn't
were
believe
about North Korea?
Yeah, I mean, you know that. You know, the Iranian nuclear deal. I mean, there's a lot of things that are up in the air, and
a lot of
yet,
war drums, man. A lot of war drums.
there is, and so I'm a little nervous that you know, I'm personally nervous about getting long the dollar and staying long the dollar over the weekend. That's just, I mean, I'll play along intraday. You know, if you know, we can have one of those days that's a trend day. You know what I mean? What by a trend day? You know, we break out and.
Are you still open to the possibility, Blake, if you show that longer term chart there where the chart before that we pull back and put in a right shoulder on the Dixie before we attempt another rally?
Yeah, I mean that's
like that. That's kind of my guess is that's what I'm thinking here.
Well, I mean, if the dollar, if okay, let's say there's no wage inflation today, none. Okay, and let's say there is. I mean, like, let's say we print 0.1% and it's stagnant from last month, and the jobs report comes in below expectations. The dollar's going to get hit, and then yeah, you're talking. Then we might really, you know, start forging that head and shoulder pattern. But I mean. It's a guess. I mean, it's a guess. I mean, we'll find out here in the next, you know, 17 minutes what we're dealing with. But I just, again, if it's a trend day, like let's say that the dollar, you know, it's a good number, or it's a not half-assed bad number, and wage inflation comes in strong as the market expects, we might get a trend day, you know, where it's the hourly, you know, we break out and we just start, you know, rallying for the remainder of the day. You know what I mean? It squeezes people, and it's not going to let people out either. I mean, it's just going to squeeze into the weekend, and that's entirely possible. And I'm willing to buy the dollar right now. Like I'm willing to short the euro dollar. I'm willing to short the cable to a certain extent. I'm willing to buy the dollar Swiss, you know, maybe the Norwegian krona. I mean, there, you know, you take the euro dollar. The euro dollar still has on its extension. You know, it could go down to 116.20. I think we could still see that, maybe even as early as today, if the dollar is strong. Pound dollar might come down to triangle support. When I say triangle support, you know, I'm talking long-term triangle support. This triangle support, you know, like we could come down and see 129 and change. You know, the Aussie dollar is already showing signs of weakness. We could head down to, you know, to maybe 77 cents. You know, there's a lot of things that could happen. I'm going to tell you right now, I'm nervous about holding the dollar long over the weekend. even though technically it would look great. But could you imagine? I mean, things start to escalate over the weekend, and my fear is the dollar will get hit. A lot of people say that the dollar is, the safe haven currency of choice. That may be the case, but if we're causing the ruckus, or we're the root cause, or one of the root causes.
They say the window for the danger period coming up in North Korea is October 10th is their anniversary, which, they're going to probably do a few missile tests. And then on the 21st, there's joint military operations.
I'm just saying that regardless, if it's that predictable, I don't know if it's going to be that predictable. But
that's true.
I'm just saying, if the risk, my fear is, the risk is that if something escalates, the dollar is not going to be looked at as the safe haven currency, and the dollar could get hit. So that's why I'm not comfortable holding the dollar over the weekend. If I trade the dollar long today, I'll probably trade it long until end of the day if I can. And then I'll get out of it for the weekend, just so I don't have any exposure, and then I can always get back in on Monday if the coast is clear. So remember,
I was just bringing up those dates. I understand not wanting to have a position over the weekend. I just read those are the dates. He's known for a show of military force on the anniversary.
Yeah. I mean, I'm just saying that I'm just not super comfortable. So
yeah.
Okay. Now let's also talk about the S&P. The S&P continues to rally, and I mean, we blasted through the 161% extension. Channel resistance comes up here at 25.75. Got asked a lot of questions yesterday about the stock market, and we passed this tax reform. Maybe that's our last gasp higher, and I personally I'm looking for some sort of blow off top, but this ain't it. I mean, a blow off top, just by definition, is when you get a huge, like a abnormally big move intraday up and down, and then we close at our lows. So like in a good example would be, like, let's say we move up 70 or 80 points in the S&P and then close at our lows of the day. That would be like a 3% move higher and then lower, and then a 3% move higher, or a 3% move higher and then close at our lows by the end of the day. And it was a really wild ride. If that happens, and then you got some sort of blow off top. So right now it's just grinding higher, and pullbacks seem to be very minimal, and I think they're going to be fairly minimal going until we pass this tax legislation anyway. So anyway, the stock market just continues higher, and they find an excuse, no matter if it's a good number or a bad number. If it's a bad number, and it's weak, they just say, oh well, the Fed's going to continue to stay loose. And then if it's a good number, then they'll just say, well, our economy is super strong. So and they'll buy stocks. So it doesn't really matter right now. I mean, it's as silly as it sounds. It is what it is. And the last thing I wanted to talk about, and then I'm going to pass it over to Steve here in a few minutes, is we have Canadian and U.S. jobs report today. Okay, now the Canadian number is, we're expected unemployment rate to pick up just slightly, but we're also expecting an increase of like 13,000 jobs. So if this is a situation where you can get a double whammy in the Canadian, and that's why I hate trading the Canadian dollar, okay, when it's both U.S. and Canadian jobs reports at the same time, especially when we're at a pretty interesting area. I look at the dollar Canadian, and I kind of look at the structural formation of it, and it's like, okay, well, what do I do here? Like for me, I would think, you sell rallies to 126, whatever the 75 level is, somewhere up here, maybe the 88% retracement, you sell rallies up to 127, or 126.50, and then you buy dips down to 125.30. But I think you stay within this channel. You can see the channel. It's pretty well defined. You know what I mean? And you know, I think this is like I said, this is a situation where we find ourselves in the middle of this channel. So if you're trading the Canadian and you're like, well, I'm really bullish the dollar Canadian. Well, fine. If you're bullish, that's great. Just get bullish down here. You know what I mean? And then if you're like, well, I'm bearish the dollar, I think it's going to reverse, and I like the Canadian currency. Well, then fine, then sell it up here. But I don't know if there's a whole lot to do when you're stuck in the middle of this channel. It's very well defined. I mean, if you look at the channel, it's not like it you know, I have to tighten up my lines a little bit, but you can see. I mean, let me just circle it here. Why do they give me the red? They give me the pink pen. I don't want the pink pen. I want the black pen. Okay. So
maybe they know something.
Maybe they know I like pink. That's Pinky Tuscadero for those of you that ever watch Grease. Okay, so man, crude is just getting killed ahead of this jobs report too. So do you guys see how well defined, you know, we are within this channel? So what if it's telling you it's well defined within the channel, then stay playing in the sandbox and play the edges of it. You know what I mean? There's no reason, you know, not to. I mean, you can try to anticipate what's going to happen here, but if we're smack dab in the middle of the range, now it's a coin toss, and you're not here to just flip a coin, right? You're here to make money. So the best thing to do, in my opinion, is wait for the better risk reward opportunities would be up here or down here. I hope that made sense to everybody. You know, that's why like the dollar Canadian, it's like, okay, well, you know, we got both reports coming out today. So, you know, technically, then once it gets up here or down here, then you have to really think about what you're doing, you know, because if the dollar gets down here and you're like, okay, the jobs report was bad, inflation data was bad, and the Canadian jobs report was super strong, I don't know if I'd be a buyer there. You know what I mean? I mean, really, like ahead of what we see right now, it makes sense to buy here and sell here. But when the rubber meets the road, or what I mean by that is when we actually get there, when we get here, you have to think about why are we there, and does it still make sense to take that trade? It's not a blindly, you know, selling here and buying here. It's, you know, that you have to think about what you're doing in this situation. So anyway, it's going to be a very interesting day. Like I said, the dollar is strong at the moment, but also keep in mind the dollar is strong right into resistance. From a risk reward perspective, this is a great place to short the dollar. I'm not saying that you should be shorting the dollar right now. I'm just saying if it wasn't non-farm payroll right now, if it was just a plain old Friday and we were a day like this, I'd probably, you know, get short the dollar here, you know, and just, you know, put my stops above the highs. But it's not. This is a day where we can blow right through this resistance, and we can just, you know, we can really start squeezing some dollar shorts. So, but at the same time, this if the dollar fails here, this is also a place where the dollar could really start, you know, we can pull right back into this range. And as Dale was saying a little earlier, we can maybe forge a, you know, some sort of inverted head and shoulder pattern. So it's, you know, these are all just things that I'm watching here. But what I am going to do is I got to prepare for my trading day. I'm going to pass the screen over to Steve, and Steve's going to take you through non-farm payroll. Steve, you know, and Stelios is going to be here too. Great.
I'm here. Yes. Hi, everybody.
Hey, gents, and Steve, you know, I know you've watched me do non-farm payroll 100 times at least with the morning edge. You know, one thing that I always do is I always keep it on the dollar yen. That seems to be the best react.
Yeah, dollar yen and the bonds are, you know, number one.
Yeah, and yeah, that's correct. And bonds are going to be really important. I think maybe you should take a couple minutes to talk about that before the it happens.
We even had this discussion about the USD yen in the chat room. Thank you. Okay, obviously the USD yen here is in, you know, in a critical juncture. It's also a matter of technical interpretation. I mean, somebody can view this pattern as an ascending wedge, which is obviously, you know, a bearish reversal pattern. but if we don't ignore the daily wicks, then you can see this as a triangle, and as we know, triangles are consolidation patterns made to usually break in the direction of the trend. As I was saying in the chat room a while ago, my intuition tells me that this is a triangle actually, and I shouldn't be ignoring the wicks, and that's going to break to the upside for another leg higher. So in this sense, Blake said it more or less, that the risks are tilted to the upside for the USD, simply because the market will easily ignore a bad print in the NFPs as long as the wage growth is decent. Since we had the hurricanes, etc., any kind of a bad print, even a horrible one, can be completely blamed to the hurricanes. But what the market cares about is what's happening with the inflation trend. And as people know, even with the somewhat obsolete Phillips curve, wages and wage growth is considered to be the number one leading indicator for inflation. So we already know that we have had a very, very solid and healthy trend in job creation. One bad NFP, especially with the hurricanes, cannot reverse that, because we always need to be looking at the average. The unemployment is already very, very low. It's at 4.4%. So using some metrics, somebody can say that the US is already in full employment. What matters is if we're getting any possibilities of picking up in inflation, and that's going to play a huge role in the Fed's decision to keep on the hiking cycle or not. If we also see the US Treasuries are at a critical juncture as well, since we more or less have a confluence, almost a confluence. It's this low that we had back in July with this ascending channel, which, if broken to the downside, will confirm that this was a prolonged correction after the impulsive turn lower in the treasuries. Obviously, as everybody knows, the yields are inversely correlated to it. So, a drop below here will also mean an acceleration for the treasury yields higher. So, we have our technical level here. As I said, if you remember, Dale, I was long the US dollar, and I already booked some of the profits yesterday. Despite doing that, because ahead of event risk, I had no reason not to do so. I also took a loss in the pound, which was the only USD short that I had. But overall, I had, and I still maintain some exposure, being long the USD against the Euro, the Aussie, the Kiwi, the South African Rand. And now I'm only maintaining some of my Euro, some of my ZAR, and some of my Aussie. I also still hold the SPX short that I took 2 days ago, and I'm even willing to add if we get a pop today, and see how the next week is going to open. So that's yeah, but I feel good about it, and
yeah, you have conviction.
Yes,
most people trade without it, and you need it. You need it.
Indeed,
here we go.
Let's see. Here we go. Indeed. Let's see what we get. Let's see. It's only a matter of seconds.
Here comes the NFP. Let's make lots of money. NFP.
Nice. Nice.
I'm an unemployed guitarist. Will I be in the number 2?
Okay.
There is a 4-hour chart, by the way. So we have.
Oh, negative. This is weak. Unemployment rate has gone down 4.2 and
minus 33K with expected of 80.
Yeah.
But let's see the unemployment rate falls to 4.2%. Yeah.
But participation rate also rises, so that's very strong. That's very strong, though. Because when participation rate drops, then unemployment rate drops as well. That's how it's been. Now
the market is actually the market actually
it's taking
it doesn't know how to interpret this. I mean, the NFP is very bad, but unemployment rate has gone down to almost ridiculous levels. Of course, you know, the underlying data are not so good, but let's see.
Well, we're getting dollar strength in the euro. Euro's making new lows, diverging.
We are. Let's see.
1680 to 1650 is my zone.
4-hour charts. Yes, the euro is now testing. You know, this is the only bullish scenario left here in the euro. This descending wedge, and we're currently testing the support. So, you know, for the bulls, I'm still short, but for the bulls, this was the bullish case scenario here, to hold this zone and then propel higher. Let's see what happens from here.
Anything on Canada? It's putting in a negative wick after making new highs.
Yes, the Canadian jobs, if I saw right, came at 10K with
but unemployment rate ticked down as well, so it's kind of neutral.
As you see, the USD yen is tested the triangle resistance. This is the 4-hour chart, but it's still failing to push above it. So the market is a little bit torn. I mean, the unemployment rate is now extremely low, but on the other hand, you know, the negative NFP, you know, is something the cable is pushing to new lows, and it's coming down to a critical, you know, to the start of a critical support area. So it's already battered quite enough.
Gold is also dropping a little bit.
Yeah, let's have a look at the precious metals. The NOK, by the way, is also still at confluence of resistances. I know that nobody cares at the moment, but let's have a look at gold.
Canada's putting in a pretty ugly wick right here, guys. I think that's it. You could short it with stops over the high now that both the numbers are in. Actually, I wouldn't do it that way, because if it went back up there, I'd add on the stops
this is the 4-hour chart.
Anyway.
Okay, this is the USD CAD. Yeah, you know.
I'm putting a PIP, a Pinkert in play in Canada.
Okay. This is indeed an outside black candle in the 4-hour chart, but you know, I don't trade off 4-hour charts, but I can tell you one thing for sure: this is not a nice candle if it closes like this. And you know, we're definitely looking for more weakness, but you know, from where is the question? I don't find it impossible that USD CAD can push towards, you know, the 128 area before lower, but definitely, currently we don't have much to do, but you know, if we do see this ascending channel fail, which I don't know if it's going to happen today, I doubt it, then we can, you know, we can start talking about, you know, the resumption lower. Until then, we have to respect that the short-term trend is still pointing to a recovery. Let's the USD yen is actually now breaking to the upside. So it's probably on its way to confirming that you know, this was a triangle and not a wedge. So this is, if it holds, this is definitely a bullish development. Let's have a look at what the treasuries are doing.
Yeah, treasury not doing very well.
Treasuries are pushing to new lows. Treasuries are actually breaking below that low. So you know, this also points the same direction as we said. As it seems, the market at the moment is showing, you know, the willingness to give the benefit of the doubt and you know, give more credibility to you know, to the unemployment number as a percentage.
Screw the market.
Actually, funnily enough, equities are not doing anything.
Yeah.
What does the market know?
Yeah.
The equities are for now not doing much, but you know,
Canada. How many jobs were lost in Canada? My guess is it's at least 5 real estate brokers from Toronto that couldn't get listings.
No, Canadian data actually were 10K jobs growth instead of 12K expected. So it was like the print was very, very near expectation. Yeah. So in my opinion, the move you see here in the USD CAD is not due to the Canadian data, but mostly due to the fact that for now the market is responding positively for the USD. USD CAD is actually pushing lower as we speak.
Lows of the day, yeah.
Mr. Pinkert in play.
Yeah. And keep in mind that this is a 4-hour key reversal so far,
All
and
right,
it's
so
actually
take half. If you did it when I said it, you have 15 pips. Take half. Put a stop over the high. In the worst case, is you don't lose money.
For short-term traders.
I'll see you guys Monday.
Okay, bye. Good night, everyone. I'm kidding.
Do the interview.
For short-term,
Mickey Falk.
Short-term traders, watch out 25.30 to 25.40 for support. We're getting there soon, but it seems that there is a lot of pressure to the downside at the moment for USD CAD. Actually, from what I see, it's probably the pair that's reacting more to the news.
It's interesting, even with the dollar surging and yields rising, precious metals are flat, so they're not that. They seem pretty steady.
Let's have silver for the time being is completely flat. Yeah. I mean, this is another spinning top we're seeing now on the 4-hour, and gold. And gold the same, actually. Gold recovered, took back its prior losses. It's flat after the NFP print. We're exactly where we were.
Sorry, Ben. I'm sorry that you didn't like my untuned guitar and NFP song.
Euro USD, but
I won't play it again.
USD, by the way, has also recovered and is still holding this descending wedge or descending triangle. You can view it as you like. So, but anyhow, things are quite clear. A close below there points to further losses. A push higher and a break above resistance, points to a recovery. So it's currently testing support once again. Let's see what's going to happen with that.
The other thing to mention is that payrolls were revised higher for the previous month,
which is also positive.
20K, I think. So the market's kind of rejecting the negative print and thinking maybe it's going to be revised higher or whatever, not putting as much weight on.
By the way, Stelio, if I'm not mistaken, and correct me on that, I think that the nominal unemployment rate at the moment at 4.2 is less than the low we had pre-financial crisis.
I think so, yes.
I think that the low pre-financial crisis was like 4.4, 4.5, something like 4.3, something like that. I don't think we went down to 4.
You're right, but I was looking actually at the participation rate chart for the last 60 years.
Yeah, it's of course.
Pre-financial crisis, it was about 66%, and now it's gone down to 63. So that, if you adjust for that, then unemployment now is still higher, quite a bit higher.
I know, you're right. But on the other hand, it's still quite impressive, right?
Of course it is. Yeah.
It's still quite impressive that we went all the way down from, I think it was 10 plus percent, right? I think it had surpassed momentarily 10% in the midst of the financial crisis, and we're down to 4.2%.
Yes. I mean, still, even adjusted for participation rates, is not 4.2%, but it's still way below 10. So,
there's no question about it.
I was looking at this chart, and the participation rate is now at the same levels as the late 70s, which was, in terms of, social background and how. Sorry?
We had stagflation then, still.
Yeah, that's true. But also, the characteristics of how what people had jobs. It was very different in terms of women getting jobs. It was obviously the 60s and 70s when it really started that they were everybody started having career or getting jobs as many as they could. So it's interesting we're getting back to those levels, but probably not there to last. I mean, it should bounce at some point, but it's quite interesting.
But by the way, to make a technical recap here, look, even if you see at my 4-hour charts here, what I have up, it's very interesting because as you see, the dollar is at support, the dollar pairs are at support or resistance, all of them as we speak. I mean, look at this. Euro USD, currently at support. Pound USD, currently at support. USD Yen, currently toying around with resistance. Gold almost touched the 61.8 before and recovered, so very close to support.
Yeah. So a lot of this kind of feels like you should be fading dollar strength, doesn't it?
Aussie USD touched overnight support. It almost did again once again. I mean, as it seems, the market, had a first reaction that's dollar positive, but on the other hand, it doesn't yet seem to have the underlying strength to, to push through. Of course, that might happen during the next few minutes, but for the time being, support and resistances are, are holding. So I think that we might get something different. We might need the market to digest the data, for a few more minutes before we see another attempt, to push through. But for now, the market is stalled at very critical levels. So I think today can end up being, from a technical perspective, a very important day, and it's going to give us the pace for the following days of the month, or for at least the upcoming week. So I think, today is going to be a very interesting day to monitor, because how and where we close on the day on all these dollar cross rates is going to be critical. And don't forget that it's just the 6th of the month, and with seasonality, etc. I mean, if we get decisive breaks today, I really believe that this dollar recovery story can continue for at least the rest of October. This is, by the way, the DXY. This is my 4-hour chart. That's why it's not so much updated. But what remains as a fact here is the following. We've said it many times. 94.20 here is the critical level. This one. And as you see, this is exactly what we're attempting to break at the moment. So
look at the divergence on the 3 drive.
Yes, there is no question about it. On the 4-hour chart, we have clean divergence. There it is.
So you're getting a little wedge. Normally, when there's a 3 drive, it kind of forms a wedge, at least the return line. If you draw,
listen. On the upper side, you can interpret it as a wedge, and you can see it like that as well. But on the other hand, I do see this, and you're absolutely right. I've also marked it. I've also noticed it on the daily chart. But still, a close below above 94.20 is going to be very critical. So if this wants to end up being like a wedge formation, this is where we're supposed to reverse from, exactly here. Okay, and we have the rest of the day to do it, but we're not doing it yet.
Canada's leading it.
Likely. Let's have a look at it again. You see, it took back some of the losses already. Yeah. And as I said, the first support area, because this is clearly, I mean, in the short term, we started we started on what was it? The 8th of September. Okay, so it's almost a month that, I mean, people haven't realized it, but it's almost a month that the USD CAD has been recovering. Okay, and this uptrend has been very clearly defined. So far, we haven't managed to break below any of the support areas. So far, it's a series of higher highs and higher lows. And for us to even consider, that USD CAD is once again rolling over and following the medium to long-term trend, which is lower,
then you have to negate that breakout.
Yes, we at least need to see a close below this 25.30. Until that happens, you're just jumping the gun. I'm not saying that people should not do it. I am jumping the gun on occasion, just having strong intuition, but I'm just saying that from a technical perspective, unless we see a break below here, it's just speculating that it's going to reverse. It's not an actual reversal, right?
Right.
Okay, cable is actually dumping at the moment, and is entering now the 130 support zone. So cable is definitely reacting negatively to it, which isn't a surprise, because if you think about it, cable during the past few days has been the weak counterpart of the dollar. I mean, it was the complete opposite until some time ago, but now it went back to being the weak member of the family.
Well, EG has recovered 38% of its recent.
Yep, let's have a look at it. Although it's not a dollar pair, but we can have a look at it. Yeah, as you see, it is recovering nicely, and since this is the 4-hour chart, we can ignore everything else and
it's about 38% back from that high to low.
Just look at the short-term fib. Okay, there we go. Yep, It's there.
Yeah.
It is there. No, it's actually below it now. It pushed below.
Yeah.
It pushed above it before. Oh wait, magnet.
Tempting. It's a tempting short. If not for new lows, at least to retrace the recent advance.
There you go. As you see, this was a double confluence up there, right? It was the 38.2 and this channel of resistance. Also on the 4-hour chart, we're seriously overbought. What I said yesterday about it by looking at the daily chart, because I'm mostly looking at daily charts, is the following. I said the following, that what's going to determine here, what's going to happen is, let me finish drawing this, is what's going to happen when we do this. So if we go back here, as you see, this is a zone, right? This one. So for me, I remain bearish as long as we stay below here. And for me, you know, what's going to tell me what's going to happen is the following. I don't doubt that we're going to get some kind of a pullback back to this zone, to the previous 23.6. The question is what happens from there, because if I see a move like this, then I'm going to be very skeptical. But on the other hand, if I see a move like this, then I'm going to know that the trend is resuming lower. So I think it's quite clear. I mean, I have a specific plan in mind here. Okay, Euro USD is making once again the attempt of actually breaking below, and let's see if it's actually going to close below the wedge. If that happens, then I think that the case of a move to the 114.50, 60, 70 area, which was the breakout area, is becomes again very high as a probability. I'm still holding half of my short here. I took profits on the other half yesterday. I'm giving always an update in the chat room for whoever is there. I think that I don't find it likely that this zone is going to hold the 116.62. I really believe that we might go all the way to 114.50. Okay, because I really still see a lot of people fighting dollar strength, and I think that as long as people are fighting dollar strength, the chances of dollar, accelerating higher, because currently, I don't know if you agree, Dale, but I think that still USD strength is the pain trade in the market at the moment. After so many people were trying to fade dollar weakness, and when they finally gave up, this might be the time for the dollar to actually start, showing strength after strength. And look at the USD CAD, by the way. Look at it.
Steve, one comment on the DSI. The dollar index is now at 60, so it's no longer, this really bearish sentiment that was.
You're absolutely right. It's more or less neutral on the DSI, Stelio, but positioning is not something that moves as fast as the DSI. And positioning is extremely important.
See, that's why I try and teach scalpers when they have 20, 30 pips, even if they want to turn it into a swing trade, you take a piece off.
Yeah, okay. Just look at it.
Yeah. So I mean,
already retraced almost all the losses. Yeah.
Yeah. There are a lot of people in here that day trade, Steve. So.
Well, which is absolutely fine. Absolutely fine. You can do whatever kind of trading you want, as long as you're good at it. As long as this is what you want to be doing. Crude. I warned about it yesterday. Once again, I said that I want to see strength towards 51.50 to be short. We didn't make it to 51.50. We only made it almost to 51.20. But anyhow, one way or another, it was more or less certain that it would produce at least one more leg lower, and this is what we're seeing here. I wouldn't jump the gun on being long-term bearish oil, because simply put, this can be interpreted as an A, a B, and a C perhaps to go. If you remember, my target, Dale, was 48.50 to 49, so this looks good for the time being. I mean, and let's see what happens from there. Okay. Let's see what happens from there. But I do think there is a little bit more weakness, at least, that will follow in crude before we actually make a decision of what's happening here in the longer term. Let's have a look at the metals once again. Okay, gold is making one more attempt for the 61.8.
I was just going to say, Steve, that gold just hit the 618, just FYI.
Yeah, that's what I was about to say, Blake. Actually, Blake, I have it at 1263. Do you have a different number?
No, 1263 is it, and the lows are like 1263.
Yeah,
Thus
yeah,
far,
yeah.
I mean, you know.
Yeah. And also, Blake, I'm monitoring this descending channel. It's not perfect, but you know, it's decent.
Yep, that's exactly what I got. Yep.
Good. Yeah. So let's see what happens from there. I mean, 1263, the 61.8, also 1258 is a zone that has played well as support and resistance in the past. So for me, this area between the 61.8 and $5 lower is extremely critical, because if gold manages to penetrate through that as well, then things become, you know, very, very, very tough for the bullish case. Very tough for the bullish case. On itself, the fact that we penetrated, you know, so comfortably about 1300, but then had no real trouble of breaking back below it, you know, was not a good sign. But especially if we manage to fail to hold the 61.8, ooh, you know, this might point quite a lot lower. So metals don't look good. They don't look healthy at the moment. Silver is holding a little bit better, but still, look at it. I mean, it's extremely heavy. Extremely heavy. I mean, it can't mount a recovery for now. It's barely holding this 16.5 level, but something tells me that that's not going to last for more. And when 1650 gives, I think that the next stop is at 1580. I don't think there's something much that can stall the price action by then. I know we have the 61.8 at 1632, but personally, I'm more of a believer of support resistance areas than Fibonacci's. I like Fibonacci's as well, especially when they confluence with you know, pattern support resistances, with you know, with other areas of interest anyhow. But in this case, I would be more inclined to be looking at the confluence of the 78.6 and my support area, which come at 1580, 1585. So that's what I would be looking for if we actually close below 1650 today. The dollar is still making an effort here to penetrate through the 94.20 level. So, you know, let's see what happens from there. Let's have a look at the treasuries once again. Treasuries already 0.33% lower. Let's go back to some daily charts and take it from there. Okay. Let's see the treasuries once again here on the daily. There we are. You see where we are? Currently testing this ascending channel. Very critical level. Very critical level. We've already tagged the low, so we're about to make a lower low after a long time in this recovery. So this is more or less going to be the last nail in the coffin of this correction, because already the fact that after reaching this confluence up here, we had 10 consecutive days lower. You rarely get 10 consecutive days lower or higher as an exhaustion, and that being it. Usually it's, you know, it's a signal that there is underlying strength or weakness in this case in the market. And, you know, after a 2-day recovery, we got more weakness. Anyhow, we haven't managed to rebound more than a couple of days in the treasuries since the 8th of September. So it's already a month that, you know, we're seeing weakness after weakness, and only a couple of days of recovery and then weakness again. And, you know, if we manage to close below 125 today, I think that, you know, this is a huge technical signal that we are headed to new lows. If you remember, we had marked that since we were here testing this support. We said that a rebound might happen, then we might go lower, and if we break that, we're going to new lows. And as it seems, it's playing out quite nicely. And, you know, today's close, as I said before, Dale, I think that what happens today and how we close today is at least going to give us the pace for what the market is going to do during the next, at least several days, during the next days of the month. Look at the Aussie once again on a daily basis, testing this critical support area. It was also the breakout level, an extremely important level. So in essence, if we break back below it, it's going to show that this was last hurrah here. So, you know, that's a very bearish. That's going to be a very bearish signal as well. I'm short since 79.50, roughly 50 something. So, you know, quite happy to be in that as well. yesterday I took profits on my Kiwi short because, you know, I didn't want to have much exposure, too much exposure, but as it seems it's now accelerating, but okay, fine, whatever. So the Kiwi is also proving that this, we had told since then that this was a corrective move after this rollover and this acceleration, which at least targets the 70 area. We had said because the minimum expectations would be of an ABC, where C equals A, that comes at exactly 0.70 and, you know, 7 pips, whatever it is. So this is looking technically very nicely as well, and it's accelerating lower. Anyhow, there is absolutely no doubt at the moment that dollar strength is pouring through the markets. The Swissy, boom, 97.50. We had said this is a critical level, and the fact that it has even invalidated the possibility that this was an ascending wedge is showing that this thing is accelerating. So this is some kind of a third. So next resistance at 98.70. But personally, I had said it since then that a break above 97.50 is probably going to tag the 99.90 area, the 161.8, which is like very close to parity, very close to this resistance level. So USD Swiss is also looking to be moving towards parity once again. In general, I think that people caught dollar short are going to be fueling this rally from this point on. Because let's say that you still had a dollar short exposure, wouldn't you be extremely worried at the moment?
You kind of have to wonder what would have happened if the NFP headline print was something reasonable, you know, like plus 80 or plus 100K or something like that.
Yeah, even as expected, for example, plus 80. Yeah. We would
Just shows that sentiment and positioning can have huge effects, you know, short term mostly, but huge effects.
Exactly, and people that have been in phase, that have been in the chat room, etc., and have been following our analysis, they know we had warned plenty of times that, listen, this is not the time to go against the dollar. The market has given up. You know, this is the time that actually any catalyst that would push dollar higher could initiate a chain reaction, and the chain reaction would be fueled by wrong positioning and wrong sentiment, and this is what we see is happening at the moment.
Yeah. And one final thing to note is that Fed fund futures are now pricing over 2 hikes until the end of next year. And
Wow.
I think if it gets, I mean, Fed fund futures always have been pricing less than what the Fed is telling us with a dot plot. But I think if we,
which given history, Stelio, is not a surprise, to be very honest, right?
Of course not. But I think that if the dollar continues a little bit more, I personally think the DXY can get to like 95, 96. If we get there, we start pricing nearly 3 for 2018 until the end of 2018. I think that's the place to start going short the dollar, for me at least. So
yeah, and this is the area. This is the area you're talking about, Stelio. It's around 95.10 to be exact.
Yes.
That's where I have it, and this is the area. By the way, keep in mind that and now the dollar is also back testing the 38.2% fib of this whole rally. So it's just back testing it. This, you know, this is the second time we're testing this area. We've talked about the importance of this area. Let's see where we close today. But then the next stop is 95, a little bit above 95, and you know, we take it from there. Then the next area I have in my radar is the 96.50 area. The next area after that is nearly at 98, and you know, the more I will keep seeing people trying to fade this, saying that okay, this is a good resistance, this is the time for the dollar to resume lower, the more I'm going to be believing that this rally has legs. Because don't forget, the markets will usually inflict the maximum amount of pain to the maximum amount of people.
Yes.
And I still see dollar strength being that kind of a trade. By the way, the SPX is down at 2,545 at the moment. So we're already 7 handles of the high. Of course, that doesn't say much, but I'm just telling you because I'm seeing in my other screen my 4-hour charts. You can see
we're back here. Down to like Wednesday's levels.
yeah. So let's see if this also can somehow signal some kind of a reversal for a correction lower towards, you know, I'm not looking for much. Whenever we are in a strong uptrend or in a strong downtrend, I'm keeping my expectations to the minimum. So I can tell you as a fact that support areas in the SPX at the moment is 2,510, and the next area of support is at 2,485. So, you know, I'm going to be happy if we get down there. I'm going to be booking half in one level, half in the other level, and I'm going to call it a, you know, a very nice corrective trade. Otherwise, you know, I'm going to reassess next week.
Nice coverage of the NFP, Steven Stelios. Nice job. So all I can say is this: click on the link for the trial, because I'm telling you guys, if you want to be an ace, you gotta hang out in face. Living at home with mom but want your own place. Trade with us in face. Become an ace. Listen to Steve. Listen to Stelios and Nick and Greg and Blake. And once in a while, Forex Stop Hunter.
By the way, just to remind the people, we're back at our usual 10-day trial for just $1. So if you haven't tried ForexAnalytix, you just need to spend a single $1 to get access to, you know, our full set of services for 10 days.
If you don't like it, I'll refund your $1. And we have a great guest today. We have Mickey Falk today.
Perfect.
And I see you in the house, Mickey.
Enjoy the interview, Dale, and for the rest of the people that are with ForexAnalytix, as always, with intraday updates and through the chat room, we will be covering, you know, whatever else comes from this point on.
This is right up your bailiwick, Stelios. Mickey,
have a lovely weekend.
You too, buddy. Mickey is a geologist, so his Twitter handle is @mercenary_geo. So we're going to be talking minerals here, and you can bet that I'm going to ask him about silver. Hi, Mickey.
Hello, Dale. How are you?
Oh, Mickey, great to hear your voice. It was such a long time ago. In fact, I still have some pretty clear memories of that interview. And the one thing, you know, normally people want to talk about gold, right, Mickey? Everyone wants to talk about, you know, the chaos hedge. But you made a great point, and copper was in a bear market. And, you know, I'm an old timer, and I used to say bull markets are roofed in copper. Turned out to be the biggest roof ever constructed in the cosmos. But you were talking about you're very constructive on copper. It was trading 130-ish, something like that. And you brought up you need it for the developing countries for them to have electricity. There's still a lot of people that live in the dark. In China and India, they can't even turn on a light switch. And that was a great call, because copper-related assets, stocks, futures, everything has really been in a nice bull run since you and I talked. That was a great call, Mickey.
Well, Dale, I actually thought it was a year ago, and to show you how old I'm getting, it was actually about 2 years ago. And copper was trading about $2.30 a pound at the time. And,
it was? Okay.
Yeah, and when I called the coming bull market for copper, it actually got down to $1.96 on January 20th of 2016, which was the day when all the commodities crashed. Oil hit $30 that day.
It was in January.
Yeah, a year ago, January. Yeah, and at that time, I called the bottom on oil. I called the bottom on copper. Copper made a double bottom, and that's always a good sign. Since that time, it kind of mucked around in the $2.10 to $2.20 range until Trump got elected. And since then, it went from the end of October last year, went from 220, and it's this morning it's pushing $3. So what is that? Something, trying to do the math in my head, about a 30% gain, I suppose.
Okay. All right. So here we are now entering, you know, gold's been under pressure since 2011. We had a huge rally a year ago. The juniors did quite well. I remember things like Mux trading at 70 cents, went to $4, and now trading at $2. Are you in the camp, Mickey, that there still could be some more downside in gold, especially if the Fed follows through with the rhetoric and does move ahead with besides the trimming of the balance sheet, raising short-term discount rate?
Well, personally, I think what's controlling price of gold right now is the U.S. dollar.
Right.
You know, we've got a huge database, something like an Excel spreadsheet that's 10 megabytes and 52 sheets. So we've got prices going back a long time, and we do daily correlations of gold to the US dollar. So the 20-day correlation right now is about 0.77, the 50 days 0.85, goes all the way out to 100 days and 200 days with very strong negative inverse correlations, I should say. So right. What I see right now, I'm looking at the board right now, the dollar's up above 94 today, and of course gold is down to 1265. So to me right now, it's all about the strength of the US dollar.
Do you have a view on it? I mean, we had a very nice 9-month decline into the 92 range. I mean, do you think the top we put in at the end of last year in the dollar is it? There's still some bulls, dollar bulls out there that think we could have just one more hurrah in the dollar that would create some type of deflationary wave, pressure everything, maybe even stocks, which is hard to believe because nothing affects stocks, right? Bad news, it goes up because the Fed will stay loose. Good news, the economy's recovering, earnings will go up. So I'm interested in if you think that was a major high in the dollar and that this is just a reflex rally in the dollar from recent lows.
Well, I suppose you're talking about that dollar or 103 range we saw in right. early mid-January, something like that. And the dollar was way overblown now. And that, you know, I think that was part of the so-called Trump rally before he came into office. You know, Trump wants a weak U.S. dollar, and right. and I would imagine that he's going to, this is pure speculation, Dale, replace Yellen.
What isn't in this twilight zone?
Right. Yeah, or Old Yeller, as I call her. Yeah. And her drool and drivel about interest rates, which change constantly from one month to the other. But I would suppose that Trump's going to appoint a new Fed chairman, and the policy is going to be for a weaker U.S. dollar because we need to get this trade imbalance straightened out a little bit. So from that point of view, that's going to be helpful for gold. One thing that's quite curious to me, another thing we do is the seasonality, and I've published extensively on the seasonality of commodities, and this should be the strong season for gold. Usually have a lull called the summer doldrums, which we all know about, where gold hits its seasonal, if not its yearly low, and it did that on July 7th. It was at 1212 or closed. Right. I think it touched 1207 that day, and we saw the rally for the rest of the summer doldrums. But the period from the 1st of September, from Labor Day till Halloween, is usually a very strong time for the U.S. dollar. or I mean for gold.
Go for the gold?
Yeah, for gold, and it has not been. It started going down, I think, in September 8th, something like that, which is right after Labor Day. But do the math, it's really just the strength of the dollar.
Okay.
I'm very much in favor of a strong U.S. dollar because I'm talking my own book here, involved in the junior resource sector. And, you know, I just came out of a conference in Beaver Creek, Colorado that was very bullish, about 1,000 professional investors, most in the junior resource nano cap space, and the enthusiasm was palpable there, and lots of money being put into new deals. So
okay.
Once again, talking my own book, I hope we have a strong dollar, and seasonality would tend to indicate that.
You'd like a strong dollar or strong gold?
Oh, I'm sorry, a strong gold.
Okay.
Strong gold. Yeah.
Okay. So now I know you're talking your book, Dollar Weakness. There are a couple of triggers out there, and then I want to get to different metals.
Okay.
And, a couple of catalysts. I've been reading that should we pull out of the Iranian deal, and Trump is dumping that on Congress to decide, but he's not going to certify it, that could be a trigger for a weaker dollar. The other thing that I want your views, what about the fact that all the sanctions we have on North Korea, and China looks like they're participating with us, but if they don't, the threat is to cut them out of the SWIFT system, and that would be a major global event, because the Chinese have a backup to the SWIFT system and would love to become more of a dominant currency anyway. What are your thoughts on that?
Well, I was unaware that they had an alternative to the SWIFT system.
Okay, they do. Yeah, they're plans, you know. So I think it's in cooperation with Russia, you know, and so yeah, just in case people cut them off from the dollar system, which I think would be, you know, almost like cutting your head off when we need support of people to want and need the dollar during this time. So if you have no thoughts on that.
Well, I probably do have a thought, and I think that would be very good for gold, because
it would be
negative for the U.S. dollar. Right. You know, the Russians and the Chinese and the Iranians for a number of years have tried to trade oil outside the U.S. dollar system.
Well, the Chinese are going to do it, Mickey. The Chinese are opening a oil futures exchange traded in yuan.
Okay, in Shanghai, I suppose.
Yeah.
Yeah. So the yuan or the yuan, however you want to say it, is artificially supported at this point. It's not a free trading currency. Now, you're the Forex guy, and you probably know this more than I do, but that certainly is not a currency that's allowed to float in world markets. So anybody that thinks it's going to be the world's reserve currency any time in the near future probably lives on the West Coast where marijuana is legal now.
Yeah, I wonder. Yeah, it's legal in a lot of places. So
absolutely,
you made me hide my bong, Mickey. So
well, I made sure mine wasn't in the background today.
All right, and it's medical. It's medical. I have a legitimate reason for it. But anyway, you know, you have a fan in here, Jess, who I know he's a Canadian, and he's followed your work for a long time. He wants me to ask you about uranium, and well, pretty good time to be talking about uranium with all the talk of nukes, but I know uranium for peaceful purposes, for generating energy. Your view on uranium? I think there have been some juniors that have put on some nice moves in the uranium market. What are you thinking now in uranium? Well,
you failed to mention, Dale, and I went back and listened to our interview a couple of years ago, and you failed to mention that I was very bullish on uranium at the time, and and I'm a contrarian.
I believe it.
I tend to get into these things early. The uranium price has suffered.
Me too, and I buy, and the market keeps going the other way. I'm always early, Mickey. How about you?
There's nothing wrong with being a contrarian. It's the way you make money in this business, especially when you're playing around in commodities like I do. You have to be a contrarian, and you have to have patience, because these things all come around at some point. Uranium spot price is still at $20, but the Trump administration is very supportive of the domestic uranium industry, and especially domestic mining industry. So we expect it to turn around. I can't tell you when it's going to happen. There's still in near term a surplus of supply. There's stockpiles, but U.S. utilities especially have not been contracting, and they're getting pretty short, and they never let themselves get so short in terms of stockpiles that they have. You just can't turn a nuclear power plant on and off. So from that point of view, it's coming. I just can't tell you when it is. A couple of years ago, I was walking around giving a talk, various places, all the way from New York to Atlanta to Geneva, called "Why I Remain a Uranium Bull." That talk now is called "Uranium Bull or Bear, Why and When." And I'm a bull, but I can't answer the when.
Yeah, that's the art of it, isn't it?
Well, you just have to have patience.
Yeah, right.
Position yourself in strong companies, stocks.
So do you do a lot of balance sheet work before you buy a company, Mick, so you know that they have cash, they're not over leveraged, they don't have too much debt to service? Because a lot of these miners are wallowing in debt, aren't they? So you have to be selective.
Right, and that's I do that religiously. Although I'm not a religious person, I do my due diligence religiously. And for miners, that becomes a significant part of the equation. Now, most of my speculations, and I call them speculations, not investments, are in the exploration part of the space. I own very few miners. I own a couple of uranium miners, a couple of small gold miners. But for the most part, I hold something on the order of 35 to 40 resource stocks, and with maybe 5 exceptions, all those are explorers. That's where the leverage is. It's very high risk, but it's very high reward.
Right, and well, that's your bailiwick. So I mean, you're a geologist, so you could look at the reports and see the survey reports and see the potential of what a mine could produce. So most most John Q publics would not be able to do that.
Yeah, and so what we do in the newsletter is try to educate those John Q publics, or what I call retail and lay investors. And I've been doing this now as a newsletter writer for over 9 years, and as an analyst for 10, and as a geologist for about 30 years before that. So so what we try to do is educate the layperson on how the junior markets work, and really talking the Toronto markets, and for the most part, the Toronto Venture Exchange.
Okay, just like CCJ in the uranium space. I wanted to ask you that the silver gold ratio on almost every gold rally since the highs in 2011, silver has been underperforming gold. Could you see any? Do you think that's going to continue, or could we be nearing an inflection point to where silver begins to outperform gold?
Well, what you said is true. Silver is more volatile, although it's a much less large market in terms of market capitalization, let's say. It is more volatile. It's always more volatile on both the upside and the downside. With the recent rally and then the fall off, I haven't calculated it since Friday, I guess, but the gold silver ratio on Friday was about 77, which is historically pretty high. It probably occurs about 20% of the time off the top of my head.
The mean reversion would be about 45 or so, Mickey?
Yeah, 45 to 55. Okay. When it really gets rare, Dale, is above 80. Okay. And so when it goes above 80, you know, I'm an accumulator of precious metals with the idea that you buy what's undervalued at the time. So when it gets above 80, that becomes a signal for me if I'm going to buy precious metals, and I will buy them on dips, but when that ratio is above 80 is when I'll be buying some silver with the idea when it gets back to more normal ratio, say in the 50 plus or minus range, then you sell your silver and turn it into real money, which is gold.
Okay. That's a pearl. That's a great tip.
Yeah, what's really compelling to me right now is how undervalued platinum is. Platinum has been beaten up so bad that it is now trading at a significant discount. And I'm looking right here, $24 discount to the price of palladium. The last time that happened was in 2001 when the Ruskies cut off imports or exports of palladium to the rest of the world. And GMC went in because of that and started stockpiling palladium, and they got burned so bad they lost $1 billion on that trade. But palladium being less than platinum is very rare, and the gold to palladium ratio is at an all-time low. On Friday, it was at 0.71. Until about 6 months ago in the history, since Nixon took us off the gold standard, it had never been below 0.75. So that's a very strong buy signal for physical platinum.
Wow, thank you so much, Mickey. You know, something with this new wave into EVs and everything, do you look at lithium mines or have any viewpoint on lithium? I don't even know where you look for it. Huh?
I have a very strong viewpoint, and that's stay away from it. The lithium industry in the world.
I should have told my doctor when he prescribed it to me to stabilize me.
Well, I got a couple of friends, I have to tell you, that in the mining business that need to take a dose of lithium, especially when they get in the bar late at night. But
yeah. Anyway, that's my experience with lithium. So you think there's a lot of hype plays out there?
Dale, in my opinion, I have a very strong opinion on it. I've talked a lot about this. Let me give you some background. Lithium, the world's lithium supply is controlled by a cartel, and it includes 5 entities, 3 of which are 3 of the largest chemical companies in the world. That would be FMC, a U.S. company, Albemarle, a company based in Baton Rouge, Louisiana, also a U.S. company, and SQM, a Chilean company, and they along with 2 Chinese entities control the world's lithium supply, and they have 80 years of reserves ahead of them right now. And they are ramping up, especially in brine mines in Chile and Argentina. So the world is awash in lithium, and I would go out on a limb and say, unless you can sell to the cartel, there's no way that's your only exit strategy. So there's no way that I am playing any of these lithium stocks at this point.
Okay, Mickey. So I've put up your website here so that our listeners and live viewers could see it, and also this is being videoed, so people that are watching it later. And you know, one other thing I'd like to wrap it with, probably what's closest to your heart, is mentoring young geologists still your favorite activity?
Well, it is one of my favorite activities, and the business has been so good to me that I decided that, well, a few years ago, basically when I launched this business, mercenarygeologist.com, that I was going to mentor young geologists and students, and by using my career as an example. It's a boom and bust business, and so my
latest, is trading, Mickey.
Pardon?
So is trading.
Oh yeah, yeah, I know that. Dale, off topic here. I just sold a stock that I'd held for 7 years. And at one point I went in at 35 cents. At one point it was 2.5 cents in December of 2015, and I was going to tax loss sell it to wipe out some profits. And I go, nah, I still got a chance. I sold my last tranche of that stock for $2.99 a couple of weeks ago. So
you know what I call a trade like that? I call it a Lazarus trade.
It was a Lazarus, and that's a good example.
Yeah, back from the dead.
Back from the dead.
Yeah.
So regardless, I was at New Mexico Tech, a week ago yesterday, and I gave a talk to the mining engineering, environmental sciences, and earth sciences students and faculty, and I actually spoke about uranium. So it's part of what I do, and it's very dear to my heart because, number one, it's a great business being an economic geologist. You get to see the world, you get to explore, develop, mine, and by doing that, we're one of the few businesses, careers that actually add to the wealth of the world, and not just recycle money from one entity to the other. We create wealth, and so I tried to mentor young geologists and engineers and help them find jobs and et cetera, and dear to my heart doing that.
Yeah, definitely, plant good seeds and pay it forward. And that's one of my favorite things to do, is to share what I've learned over the decades with people. I say you can't learn experience. It only comes with the passing of time and living through stuff, but you can learn from the experienced. So they're lucky to have you, Mickey. And you know what? I feel fortunate to have you come and talk to us again and edify our new community here at ForexAnalytix, and keep up the great work. And I'm going to start paying a little closer attention to uranium, and what a great idea on the platinum and the palladium and the ratio work, and when to buy silver when it's pressing over 80. So you've given us actually some actionable things to consider, and I just want to thank you for taking the time out of your day this Friday to be with us.
Well, thanks a lot, Dale. It's my pleasure. And you got my website up right now, so I'm going to give a little plug. The best thing about it, and you're scroll back up there a little ways and look right under my mugshot there. And the best thing about my newsletter, it's free. So all you got to do is click on that and give me a name. You can fake your name. You got to give me a real email address, and you'll get my my products every Sunday. We send notice once a week.
I encourage people, if you have an interest in minerals and also want to learn about buying not ongoing working mines, but exploration plays, here's the newsletter for you guys. So thanks again, my trading warrior brother, Mickey. And I really enjoyed talking to you again. Thank you for coming back. Doing it once is tough enough, but doing it twice, you should win a medal being interviewed by Dale Pinkert.
Dale, I'm at your beck and call. So anytime you want me to appear, just send me an email and we'll set it up.
All right, buddy. The best to you and yours, Mickey. Thank you for being with us today.
All right. Thanks a lot, Dale.
All right, so sign up for Mickey's letter. That's it for us in FACE. Good luck, everybody, the rest of the NFP day. I want to thank everyone. We had a great response to subscribing to the team at ForexAnalytix. You could still go ahead and take a trial here, and remember, you have to take a 6-month subscription to be part of the chat room, where there's anywhere from 60 to 80 guys in there. So I want to thank everyone for their support here and on Twitter and everywhere else. But most of all, my friends, don't just count your pips, count your blessings. Have a great weekend, and God willing, we'll all be back together Monday. Good hunting the rest of the day. You're very welcome, Jess. You're welcome, Andre. You're welcome. Thank you, Kareem. Adios.